Back in the saddle, John, and I haven't paid attention to anything. What are we talking about today?
You've been on vacation, I'll take over. Don't worry. We're at a crossroads. And normally, I don't mind a crossroads where decisions need to be made on the grains. Unfortunately, these are terrible prices, and you still need to make that decision. So I think we'll go over that. This is a pivotal time of year on marketing decisions for corn and soybeans. We have a few strategies and probably some whining about the low prices, but we'll get it all done.
Love it.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I just rolled in from Bozeman, Montana. Nice, quiet 11-hour drive, 12 hours back with the time change. It's dry. West of Fargo is dry.
Are you saying there's going to be a drought? Is that what you're saying?
I'm making the drought call right now. We got drought everywhere. No, I have no idea. But there is no snow once you get past Fargo.
West is dry, and we had what I like to call, being from where we are, west central Minnesota, a fall spring, which we have many of them.
I love the fall spring. It's so beautiful out.
I love while it's happening.
Fish on the lake. Don't need the house. Just sit on a bucket.
I don't like what comes after. It's usually punishing, and it all evens out.
Right.
But we've been in the 50s, almost 60s, and all the snow's melted, except for obviously the shade. I mean, field-wise, you can see most of the fields. We're going to get covered up here again. But now we're going to start focusing on spring and prospective plantings. I have to say, this has probably been one of the quietest winters so far. Usually you feel this buzz about, we're short on beans. Now we're going to need bean acres and we're going to have to compete with corn. I don't think I've ever felt it this flat. Even last year, we were going to $5, or we were probably there by now in corn, and there was something exciting. There was something going on. Now we have a little bit with the soybeans, but you don't get this sense that farmers are enjoying, producers are enjoying what's happening. I think they're probably looking at the bills, looking at the inputs, and it just doesn't have the same springy feel that we normally have. It is still mid-February, and we have a ways to go, but it'll be here before you know it. You know how it goes.
Yeah, there's not a lot to cheer about, although with the exception of beans. You want to talk beans?
Yeah, we're definitely gonna talk beans. Now, I have ideas for the market. I have suggestions. I have all kinds of things going on in beans. The problem you have with beans are, when it gets in this mood, it's incredibly dangerous. So why don't you just go long? Well, I mean, if you trust the spreads up front, which is 15 cents. I just went and looked. The March, May, which I talk about in corn as well. Both of them, corn and soybeans, has been widening out. What does this mean? It means March is losing ground to May. We're at negative 15 in the beans. And then we're at negative 10, 10 and a half, or it was in corn. And what we don't want to see is a rally like we're seeing in beans and then that widen out. That would show that this is mostly Wall Street. Now, I'm not saying that China can't come in and buy. We had the marketing year lows for exports last week. So this looks a lot like the October rally that we had. I believe it was October, where we just started coming up. They started bear spreading it, on the way up in the front. And it wasn't real, and then, of course, it collapsed. But it's really powerful. When these guys added as much as they did last week, I mean, it was near, a record for a few days. So they're heavily long, which makes it a dangerous market. So what do you do here as a producer? You use these rallies to market your crop, your old crop. And without a doubt, that's happened across the country. I don't know, is that what you're hearing? I definitely am hearing that.
Well, I'm not hearing much because I was gone for a week.
Yeah, you're at kind of vacation, which I've been jealous. Everybody. My buddy called me. Everybody's on vacation. Here's poor John feeling sorry for himself in the office trying to work.
Poor John.
Yep, poor John. I was going to go to Vegas, not going there. Then it was going to be a trip to Florida, not going there. It just hasn't worked out for me. But, hey, I'm glad that you haven't missed
but
much.
It's been 50 here, so it's not like you're missing out.
Yeah, and I should be a lot more productive. I mean, I got things to do, and you know how it is. But seeing how many years on vacation, the funds have been aggressively buying beans, which when you were leaving, that's what it's. And last week, they were still buying. I meant they just haven't lightened up. So what does this mean, and how can I use it? Well, we were just talking about that marketing. So old crop. Now we're getting into the zone now with November moving up to like 11-17. That's next year's new crop, the one that you're going to plant in spring. And we're getting to levels that are attractive now. But the problem we have is we haven't seen any of the summer weather at all. So what does a guy do here? I'm in the camp that you want to keep the upside open, but I don't like to chase a rally. So how do you get this price and then keep the upside open? Well, you have to make choices here.
You sell calls.
Yeah, you sell calls.
I'm just kidding.
Do you buy a put with that much time?
Please don't do that.
No, buy that much time and then now because the margins are so horrible. You know, we're not at high enough levels to protect it with puts.
Right.
But that's ideally what you want to do. That way you're not committed to that price. If it goes higher, you get it. But neither corn nor soybeans have that. So what can you do? Market some on this rally and then turn around and, if it were to set back like all the other times in soybeans when the funds buy, then look at calls, to get some coverage for that summer weather. And the window that I want to own is May going into the end of June. That does not mean July options necessarily. It might be August, it might be September, it might be November. It's hard to know what works best. It means, but just because you make some sales now doesn't mean that you're not going to re-own upside later, I guess is my point. People make it so black and white. The problem that you have is if I commit this, it's 11-17, it's not the greatest price in the world, and then I don't get to see any summer weather. So they don't do it, and then all of a sudden it drifts off. But I will say that we're kind of, like I said, I hinted at it, it's this, not this hopelessness, but just not this excitement. And it's so bad, in fact, for prices with these inputs, is like, why do anything? There's a lot of guys that are adopting that attitude. What do I have to lose? This is not going well. My expenses are out projecting my profits. So what do I have to lose by just watching this? And that's I can't fault the guy for that because these are unattractive levels.
I was going to say that's a very fair question, and I would nod my head and say,
yeah.
Go.
It's almost like you're at the blackjack table and it's going really poorly, and you're down substantially. Let's say you're down a couple grand in Deadwood. We're hanging out in Deadwood playing, and then it's like all of a sudden it's like I might as well, just throw the kitchen sink at it. I mean, if the ship's going to go down, I might as well just, go all in. So it's got that feeling to it, but it's not a good all in feeling. Like you're kind of gambling on a drought or a Trump tweet that's actually true, to where like China's buying something to change this. And that's really where we've been going round and round in circles, is we just don't have that factor like we would normally have this time of year.
So tell me why you don't like puts right now
on beans.
Yeah.
Okay. So what you got to look at what coverage you want. Like the lows usually go for beans at the end of the September, but lately a lot of the stuff's in summer, and corn and beans have been bottoming in August. So you'd want at least that much time. That's where the lowest prices have come. And then beyond that, it hasn't been you don't need any more time than that. So then it falls on the September options, and I don't have a problem with that. That's definitely an in-between contract. Late plantings, it's more of old crop. Fast planting is more of new crop. A lot of it depends on the year and logistics and rain and all kinds of stuff. But anyway, so there's nothing wrong with that. It's that let's say you have 20 cents somehow of gains on beans if you plant them at this price. Everyone's going to be different in every part of the country. So if you start giving up 40 cents, then you don't have those gains anymore. So that would be the one downside. But the big bonus is, let's say you spend 40 cents on a put for that time period, you have all your upside wide open. So you're getting into this where there's not enough meat on the bone to buy these to protect it. And normally this time of year it makes sense, or at least going into May it makes sense. But back to what I was saying, it's just the whole situation is just so bad that guys would they're almost going old school, like before all hedging. It's just like, let's just see what happens. It just can't always stay this bad. I mean, that's to the point where people are numb and they got nothing to lose.
Yep.
But there's guys though, like you go to the East and they're going to be dealing with a different bean price than we're dealing with here. And then in North Dakota, like these numbers totally work. And for a lot of operations, and then you would definitely have different strategies. Where here it's not workable at these numbers, or not very, I should say. It's okay here in this region. You go further west and it starts going downhill pretty quick. But so beans are very regional, and so what are some strategies? Let's get into the actual. What could you do? We suggested September puts. If you look those up real quick, Ryan, what are we looking at for anywhere near the money for those September puts?
Man, put me on the spot. Let's see how fast my computer works. Where are we at? 11.20.5 was the closing price today.
Yep. And then because I haven't looked.
And the 11.20 put was 53.5 cents.
So that's what I'm talking about. You're giving up 53 cents. Could you sell buy a put? Yes. And there's a lot of different combinations that could make that a lot less. One strategy that I heard was sell a call, buy that put, and then sell a lower put. So basically gives you a range where it protects you to the downside, and then also where you're kind of limited to the upside. But you're open to margin calls in that. And there's nothing wrong with that. One guy had an order in he had told me about, and it filled, I think it was just net 1 penny to the buy side, meaning after he sold the put, and they sold the call, and they bought the put, then it was net no money. But that sounds great. It just comes with risk both directions, down and up.
Yeah.
So you can get into that and do a lot of different ones of those. But if you spend just 53 cents, and that's going to knock your price down, back towards that 10.60, 5 mark, somewhere in there. My math was a little off there, but approximately, that's where you're gonna be. So that's the problem I have with it. So what should a guy do? I mean, that's where we're at for corn and beans, and it feels like a critical time of year, but the prices aren't high enough. I honestly don't remember us really ever running into this. There's always one that's kind of been bullish and one that's been profitable. Like last year it was corn, and all the corn acres went, all the acres went there. This year it doesn't feel like that. It just feels like it's hard to know what any of the acres are going to be, and then everybody's just so quiet about it. I mean, you just don't hear much. It's just a really odd year, and we don't normally run into cotton, wheat, soybeans, and corn all low priced, with the outlook being poor. And just because I'm saying that, is probably going to be bullish. We'll get some hot. So what can a guy do? Nothing is one choice. Buy put for 53 cents. That doesn't have any risk to it, other than what you pay for the put. And then, like I said, just kind of play it by ear, looking for spots to market here, and then buy a put on kind of a dip. So you have all that stuff, and there's really no good answers this year. Everybody's kind of doing different stuff. I loved it not that long ago where it was very uniform. You could send out an email. You could send out a text. I'm buying $5 corn puts for 34 cents, and then the phone would ring off the hook. Well, theoretically it's supposed to ring off the hook, but you know what I mean? We just don't have that. So now it's time to get creative. But as I talked about before, you want to be very careful about getting complacent about these markets. Look what beans are doing right now with pretty poor fundamentals. Like, don't underestimate what this could do in a short period of time, and don't start piling on heavily short stuff when the implied volatility is this low, and you're just asking for a disaster to happen to you right in front of a summer. So you want to make reasonable decisions, but as time's ticked on, we both kept on hoping that we could tell you, like, this is what looks good, but really the prices haven't risen very much. So back to beans. I'm looking at bear spreads. Next year is like November 26, 27. And this is not on the hedge side. This is more on the spec side, but you can use it, it's kind of like a synthetic hedge if you're short November 26. So bear spreading, I'm looking at I'm not interested in the July, November. I rode that one up. I'm not interested in trying to ride that one on the way down. And also, like, I like the May, June puts in soybeans right now. You'd have to call me and we go over specific strikes and recommendations or email. And I'd be happy to do that. But I just think there's downside probably coming in beans. I mean, what's your prediction? How do you think this plays out, corn and beans going over into the March report, which is just a little over a month away?
I am a big fan of the June puts. I think it's finding the right strike.
Soybeans?
Yeah.
Okay.
I think it's finding the right strike, and I also think you're looking at making 5 cents. I'm not looking for a home run put.
The last time this happened though, the 1090s I had on, and it must have been March, and I threw them away because it was acting like it didn't want to go down.
Yep.
And then those ended up being 50 cents in the money or something like that.
Yep.
So the last time this happened, it usually dumps 60 or 70 cents. So you can definitely make more than 5.
You can.
Yep.
But I mean, that would be goals.
Yeah.
I mean, you buy 5 of them and hope to make 5 cents on 4 of them and hope to leave a home run one on. I don't know.
Yeah. I mean, that's the way to approach it is multiples and just piece it off.
I mean, that's where I think, it's the way the market has been behaving for months now.
Yeah.
Is, take your profit when you have it. If you want a home run, put extra on and take your profit and try and leave one home run on. And 90% of the time that home run actually goes to zero.
Yeah, there's been very few home runs. The cattle market, there's been a lot of opportunity for home runs there.
Yeah.
On both sides. And then the gold and silver, on one side, both sides there now too. But there's been very few like markets that are going to make you happy and very, like a just huge home run with big gains. It's just not the markets we have. The profits are very fleeting, but still, as we approach spring, it's guys are gonna have to start making decisions. Without a doubt, old crop, the decisions are being made on that. I feel like a lot of beans are getting into the pipeline now. And you can tell by the carry, which I mentioned, and it's negative 15 cents. That's not healthy. As a matter of fact, it's losing on the way up. I think we're at negative 16.5 this time last year. And beyond that, that's like 20-year lows. So there's a lot of carry in the market. This doesn't seem like it's real, and I say seem. And then you got corn also, which I've talked about the March, May there. That one's widening out as well. So you want to like not grab these prices, but at the same time, there's definitely warning signs that even these prices might not last that much longer. And that's really pathetic to say. I mean, we just, these aren't good prices, but the underlying structure to it looks very weak to me in beans and corn and wheat. Wheat looks a little better. March, May almost got inverted here. Wheat looks a little bit better on that side, but still just there isn't a lot of good news here. And with this widening carry out front, I really don't. That's exactly what happened last year. And this is where we kind of topped last year. And, it's like, it seems crazy that we could be topping here, but that very well, if there are a lot of old crop gets in the pipeline, we very well might be until summer. So, that's kind of where I sit on it. It's like you have to decide whether you're going to try to make these numbers work and then try to add value on top of it, either bear spreading, selling calls eventually, when that lines up, do nothing. And those are kind of your two choices right now, and neither of them are very good. And I don't want to point one to one or the other for a guy right now. I mean, which way are you leaning? Doing nothing or doing a little bit of something, maybe for at least like 10% of corn and 10% of new crop beans?
I'm really on the in general nothing. I do think beans I'm looking at doing a small amount. I would say
10% seems like that a guy should be looking at moving some of the new crop. And I think guys are. I don't think guys are shooting for the moon here. But I from what I hear on the phones, there definitely is some movement there. It's just so odd to me because normally you hear a lot of stuff this time of year. Like you hear things, you hear about planting, you hear about, I don't know, vacations. This year it's just you're not hearing about anything from anybody. It's just very quiet, and I'm not used to it at all. Phone still rings plenty, but I'm just saying Like the usual planning just doesn't feel like it's there. So we got two kind of crummy choices right now. I think a lot of people are definitely going to go into summer and see what happens with their old crop because these new crop, because these, what do they have to lose? Like if they're going backwards fast right now, what do you have to lose to look for better prices? That's the way I feel like most people are leaning, except for in corn. They're getting a little bit aggressive there for my liking at these levels, because very easily you could get 435, 440 futures all year long for the last 2 years that corn's been bearish. We're at 460, so you're giving up 20 cents. If, let's say you take 460 and you lock it into the elevator, you're giving up for 20 cents of what you could get normally. I'm in the camp that you kind of see what happens this summer. I don't like the way this looks going into spring, but still, I'm going to give this stuff a chance. So maybe guys aren't struggling with it. Maybe they just feel like, hey, these are crummy prices, but they're going to be better in the summer and they're happy and they're just not telling me. But it just doesn't feel like it. I
would say, I mean, you mentioned it earlier, but the vast majority of the phone calls or the people that we talk to are, there isn't a clear plan out there where they're
there definitely isn't.
And that's why I think a lot of guys are sitting on their hands, because there's just nothing to give an indication of, it's one thing if you have your plan, you have your decisions, like you want to see these numbers and then you end up being wrong. This year, there's nothing to even like say, this is my clear plan right now.
Yep.
I might be wrong. I might be like, I couldn't tell you either way, especially on corn right now.
Yeah.
Corn's
very difficult.
Beans at the price that it's at, like I feel like you got to lock something in. I think there's opportunity from a speculative side to do something with beans.
I do too.
But you could be wrong. It's just clear that there's something that you could do. I don't think the time's right now.
Yeah.
But it's just clear. Corn is just not clear.
No, it's not, because it never rallied this year. This is going to be the first year where it genuinely doesn't rally. Not that last year was great, but at least we're above 470, and that's where the insurance locked in. I don't know what the average is going to be, but pretty soon that's going to be set. It's probably going to be in the 460s. So it's, believe it or not, it's not that much different than last year, but it feels way different. It feels like this 460 could slip right now. We could be at 440 in front of summer. And then if we have good weather, that was the best price. So it's just not it's a very difficult market to know what to do there. And I think that there's going to be a lot of corn planted, though. That's, there is a worry there. I don't think the beans are going to steal the acres. Now, this bean-corn battle, whatever it is happening right now, actually is beneficial. At least we do have something. Like you say, You can mark a little bit on the new crop beans. This is a move that is powerful, and it's about as high as we've seen in a while. So it's not like all bad, but still, if I'm just hoping this isn't the rally. You know what I mean? And it feels like it could be.
Right.
But I also, really quick though,
I thought you made an early drought call, and I was just agreeing with it. So,
and that's weird too.
There could be $1 out there. John.
That's super weird that's happening this way this year as well. Because last year, that's all anybody could talk about. Some college professor from somewhere, weather-wise, says it's going to be a drought, and then everybody's planning on that in February.
Right.
But it's actually very dry everywhere this year, especially west, and you don't hear a thing about drought.
Right.
You do hear about guys digging fence posts and putting fence in, and how dry it is down, even in Minnesota where they where they can, the ground's not even frozen. It's so dry. Because we didn't rain again for the third year in a row, basically from mid-July all the way through fall. It was just not wet. And then back to the December 26th corn really quick. New crop corn, because it feels like guys are more aggressive, and I might be wrong on this, but just my feeling is a lot of this corn's getting locked in at 460 and they've given up on it, that it's probably wrong when people do stuff in a big group. It's not that they're not smart. It's that when people start flinching in a big group, in commodities, it's usually the wrong thing. We couldn't possibly know the weather. This is just a hunch I have. I think, my guess is that there is going to be an actual crop scare this year. It doesn't have to damage the crop even to have a crop scare. It's been so long that It's like, we're not going to have a drought. No, I get that, but just 2 weeks of hot and dry, is going to be very beneficial for marketing. That's most likely what's going to happen this year, is that we're actually going to get a crop scare that did get something done. But unfortunately, you can't depend on that for your marketing.
And that goes back to that whole plan thing, right? Like, that's why, like, I would love to plan to wait to market corn until there's a scare, and then I'm going to market it. But it could just as easily be no scare, and you can
like last year,
20 or 30 cents, easy.
Easy. As a matter of fact, if it's like last year with a large amount of corn acres, we're going to be in serious trouble. That at that point is going to start stacking up. Even with this demand, it's going to be too much corn.
Yeah,
it already is. I mean, so there is a.
Well, that's what you're seeing on prices right now,
and I think that's why guys are running out and marketing 26. I think that they do feel like there is a big danger of that. So I won't fault the guy. I mean, if you're making money at 460, do it all day long. I think that you try to reestablish something on the upside when it looks prudent to do that, but you can't talk a guy out of being profitable. So kind of round and round we go with this stuff, but we're just not used to this. Like, we're used to something happening this time of year, or at least some excitement going into spring, and beans, I mean, but it just feels like a fake rally. It just doesn't feel like a real rally to me. It's been very beneficial to get rid of old crop and market some new crop. But you never know. Maybe Trump's right, and China's buying like crazy, and we're going to find out here pretty soon. But marking your low last week in exports doesn't seem like they're buying to me, but maybe I read the tea leaves wrong.
I mean, it wouldn't be the first time.
No. No, exactly. Beans are real slippery, and I'm really careful with beans this time of year. I've been way too bearish early, and boy, can that sting you. So it's like, I don't like to give up on beans in February.
I remember my first year trading, which is, I don't know.
Was probably crying
9
back
years
here.
ago?
Was I crying back here because I was bear spread?
No, but I was short beans in the spring, and I remember like Easter weekend, I'm like, oh, it's finally going to break, and it did not break. It kept going and kept going. I don't remember what year that was, but 2017 maybe, 18. Yeah. And
back when beans used to get tight.
The whole spring was they just kept going up, and I'm like, there's no way this, like, the fundamentals do not support this. But
you just described the old bean market where you could set your watch by getting tight in the spring, even with the numbers that the USDA had. We're always wrong, for what was going on. Like, the demand was always way better than what it seemed like it should be because of the gravel roads and the mud and the ruts and the trucker strike in Brazil. The infrastructure wasn't there, and we'd get all that demand all the way through June. Now it's like they're already shipping the stuff out as they're in the field. Right. So that's changed. But it did used to get tight pretty much every spring, even if the numbers didn't show it. The USDA would adjust it down to next to nothing pretty much every year at the very, very end. But it feels like they're adjusting it lower right now, probably have more. Then, right. It's the exact opposite, and it starts stacking up in spring. But no, we're at an important time of year. And I feel like you're at that crossroads where you have to decide whether you're just going to see how this all plays out or what you're going to do. And then old crop, I think, is easy. You're moving beans on this rally, obviously. And if you're not, you're looking for a weather event in the summer to move it at higher prices. And then, we don't know what to do with beans or corn. These are tough prices because they're not good, but they're not terrible either.
Yeah.
And it's really difficult to know what to do with them. And then even a tougher market, though, quickly before we got to go here, is going to be cattle. So it's almost like you don't need to talk about cattle because it just goes up. It's like, it was up again. We had, 250 cash? I think that might have been the highest cash ever. I didn't
see that.
I think it was 249. So I believe that's the highest cash. Maybe we had 250 a number of months back, but the numbers don't work here. Quickly, here's my thoughts on cattle. They don't work from the fat and feeder spread, meaning the difference for what you pay for a feeder and the finished cattle. The numbers certainly don't work. There's going to have guys that have operations that make them work because how they have their feed and all that stuff. But it doesn't work, in a normal operation. And then the packers got really bad margins. Now I say this, and I don't mean for you to feel sorry for them. I'm not on their side even. What I'm saying is it's a business, and you can only operate a business so long in the red,
Yeah.
and this is deep in the red, as deep as they've ever been. Others will argue they're still making money, even though this is record breaking. And it's hard to know. Of course, we don't know the real numbers, but if this continues, more plants will eventually shut. Something will give because the numbers don't work, and I'll kind of leave it at that. It's this euphoria. There's not a lot of cattle out. The cattle guys definitely deserve this. But there's going to come a day of reckoning here, because unless box beef moves up, these numbers can't continue on for a lot longer.
So we were in Bozeman for Valentine's Day.
Oh, that's romantic.
And we're at the grocery store, and I sent you a picture.
Yes.
New York strips were $11.99 a pound. On sale, $11.99 a pound though. That's cheap.
Yeah, they're trying to move it. They're having trouble moving it.
I haven't seen strips that cheap per pound in a long time. It was like it was $9 off, right? But $11.99 a pound. If I wasn't in an Airbnb, I would have stocked up
with a grill. Yeah, no, they are featuring it, and it is on sale. It isn't been moving good. There's arguments whether there's enough out there or not. It feels like the channels are fairly full, and demand, like the last time cattle went up here before it fell, before the famous Trump tweet. Box beef was doing very well and things were moving. It was a demand-led market. This one is a supply-led market this time. That meaning the supply is low and it's up. And those are much weaker markets than demand-led. It'll just be over one day. But again, there's not a lot of good hedges. I finally have something, though, for feeder cattle, where it's like the numbers are starting to work, where you're giving up $7-8 to the bottom line, and you can work with a floor that you won't go broke with. And I'm doing this because guys have to get hedges on that are buying cattle now. So there's in between stuff. Give me an email or a call on that. I'll tell you exactly the strike prices that we're looking at there. But I definitely want to keep the upside open and just buy the floor. I do not want risk in that market at all.
It's been a crazy one, that's for sure.
Yeah, it's been. We need a little bit of that at the spillover into the grains. Give cattle guys a little break, the hedgers a little break, and then get some of that buying over into the grains. But I don't think that's going to happen. Corn isn't cattle.
That's very true.
Yeah,
very true.
But really quick, I have talked to two of my clients that don't have cattle. One of them had cattle a long time ago. He didn't enjoy it, but because of what's going on right now, they're probably going to put up fence and start putting cattle on feed there. And he doesn't want to, but he thinks it's a bigger value than selling corn for nothing around here. And then another large operator, they are also thinking the same thing, and they never have had cattle, and they're thinking about diversifying. And another one I talked, same sort of deal. Not that they're all going to do it, but you can tell that there definitely is some interest. The cost of entry is very high right now.
It's very high.
Yep. So that's one of the problems. But there is interest in diversifying the farm. They are sick of this cycle, and they don't see a way out of it without some diversification. So I do think that you will see that in the cattle market again. That's the good news. Going to need somebody to take over.
If everyone does that, the cattle prices will go down and the corn prices will go up.
You do have to get out of the tractor though if you have cattle. I mean, on the ground. You can't be in the cab the entire time.
I thought you just watched them in the field. I thought you just bought a cow and you watched it chew grass and then you put it in a trailer and took it to market.
If they can find trouble, they will find trouble. They're not our cattle, but we're around cattle plenty. And if they can find trouble, they find it.
Oh man, we did have cattle growing up, and they, once they get on the highway, that's you got work to do.
Yep. Right after you get out of town, basketball down, you're somewhere with, the kids, and then they have the cattle on the road. It's, so there's a reason why guys don't want to do it. It's tough work. But this price it's gonna tempt people, and I think you're gonna see diversification. And a year from now, you might even see it in the numbers. Yeah. Who knows?
Yeah, who knows? That's well, John, I'm just getting caught up from vacation here, so we got to cut this one short. But
we talked plenty.
We covered a lot.
Yep.
I'm going to call it the random show a little bit, but
it's still the main feature was, what is your, you're at a crossroads now after this rally in beans and corn. Well, corn rally, and what are you going to do? It feels like you do need to decide what you're going to do, and otherwise we could start eroding from these prices, and then you're for sure going to be doing nothing and hoping a summer rally happens. But I do think it's quiet, but it's a critical window that guys at least have to manage. I mean, you have to decide what's best for your farm. 10% now, 20% now, 100% now. Own a bunch of cheap calls after it falls. Like, what combination are you going to be looking at? And I think that after this rally, decisions need to be made. And that's really what this episode was about, is dusting off those old numbers, the old notebook, and trying to make it work here. And this isn't a fun decision. It's just like, I'm not making much money or any on this, but this might be the best price I see. But I still feel like a lot of guys are just going to go out and plant and see what happens because they have nothing to lose.
Yeah, I would think it's time for a course and to watch the Olympics rather than doing numbers and figuring things out.
Yeah, and that's for the bankers and those guys to figure out this. No, the meetings have already happened, and I haven't talked to too many bankers, and normally I do, and it's just really quiet. I mean, you just don't. Bring back the old market. I want the old market. I think everybody does.
I think everyone does.
Worried about margin calls. It's like, you don't really have to worry about that in grains right now.
No, you do in cattle.
Yeah, you do in cattle. You need to worry every day in cattle about margins.
Well, leave your number, John.
218-731-1578.
Thanks.
Sure.